Welcome back. Now we'll look at where markets ended the week after we did see key economic data on Friday, the Federal Reserve's preferred measure of inflation. The January PCE came in line with expectations, up 0.3% month to month and up 2.8% year over year. We also saw the second read on fourth quarter GDP, which was up 0.7%. That is below the expectation, which was 1.4% last month, and still showing growth, but certainly lower than expected. Joining me now is Navellier and Associates Chairman, Founder, and Chief Investment Officer Louis Navellier back with us. Louis, great to see you. Thank you so much for being here. And of course, we talk about this economic data, but what has been driving markets so much is the price of oil. Assess where we are with markets as you saw oil move higher and stocks move lower this week.
Well, the news that India is negotiating to transport 23 tankers through the Strait of Hormuz is helping a lot. Apparently, Iran needs the money. And India controls 40% of the tanker traffic through the Strait of Hormuz. So if that goes through, that's why we're getting relief on oil prices right now.
I see. So do you think this is a temporary spike in the price of oil?
Oh, yeah. Yeah. No, the supply will come back online, and but it will temporarily increase inflation for both food and energy. They're not getting the fertilizer through the strait either. So that's really critical for food prices.
Yeah, I mean, the fertilizer is a really important point because we are now entering, the spring growing season. So it's fertilizer that's seen prices go higher. It's oil and gas. Do you want to own any of those companies involved in terms of oil and gas and fertilizer?
They haven't shown up on my radar yet. They're very cyclical stocks. They don't always have the best year-over-year comparisons, but they do much better in the spring because prices naturally rise.
Okay. So I know in the past we've talked about gold. You like gold and you like the gold mining companies. Tell us about that. Are you still wanting to invest in that sector?
Yes, because central banks around the world will be doing more quantitative easing. And they can't balance their budgets. Britain, France, Japan, China, I still think will devalue their currency. But just north of us in Canada, it looks like they're slipping into recession. And they're going to have to slash rates and maybe print some more money, too. So what central banks do to shore up their credibility, they just buy more physical gold. And that's what's driving the gold prices higher.
And you like the mining companies better than buying the actual gold?
Yes, there's a lot of good gold ETFs out there, obviously, but I'm right now buying the miners.
Let me get your take on the Fed. Since this upcoming week, we've got another Fed meeting, Louis, and the expectations have changed in terms of rate cuts. What's your sentiment? President Trump said, look, the Fed should be cutting rates immediately, not waiting for the meeting. The meeting is the 17th and 18th. What do you think we'll hear? And do you think we are going to still see 2 rate cuts, maybe 3 rate cuts this year?
I'm still in the camp of 3 rate cuts. Most people are in 2.
Yeah.
But I think it all boils down to Kevin Warsh and his hearings. He is a proponent that AI is creating incredible productivity gains. And that will allow us to cut rates because the growth won't be inflationary. So the Kevin Warsh hearings will be critical. Obviously, we need Senator Tillis to let those hearings proceed. I think he's blocking them right now.
Yeah, I mean, I know that Kevin Warsh is having one-on-one meetings with members of the Senate Banking Committee, and the hearing is supposed to be the confirmation hearing sometime in March, so we'll be watching that. Any other sectors you want to tap into here, Louis, after all this volatility that we've seen in stocks?
Well, Navellier is having a big conference, and that's going to help the semis, all the optical companies. The internet's getting faster and faster, so all the data centers, have optical connections. And so that Navellier conference is lifting that entire sector. And so that's good news in the upcoming week. And otherwise, it's not really a sector market. It's still stock picking. It's still narrow. I wish I could just declare certain sectors. I have no financials whatsoever due to the fuss over private credit and the redemption restrictions. I think that's been handled okay because no one's really lost money, but you can't get all your money out at this moment.
Yeah, that's a great point. A lot of these companies have put up walls and windows, and they don't want to open the window to get your money out. Do you worry that that will further hurt the financials?
It's tainting the whole sector, but I think they have it contained at this moment. And then some private credit is fine, you know, like Oracle finances its data centers through Ares Capital Management, and obviously Oracle is going to pay their bills, okay?
Yeah.
And so that debt is fine, but private credit was created by Dodd-Frank. Dodd-Frank made bank lending more difficult, so a shadow banking system emerged, and it just happens to be a $3 trillion a year industry.
Wow. All right. All good stuff. What a great conversation, Louis. We so appreciate your time. Thank you.
Thank you.
All right, Louis Navellier.